Good morning and good early afternoon, ladies and gentlemen. Welcome back to Real Estate America's Newsroom. It is May, the beautiful month of May 3rd in the year of our Lord 2022. We've got an awesome show, as always, put here together for you and you alone. Unless you share this to all of your friends, and we please ask you to do so. But we're going to roll right into the opening notes here, ladies and gentlemen. Take out your pencil and your paper and pour your preferable beverage, because we're going to get into it. We're going to cut through the real estate noise in the great United States of America. Real estate tech stock price targets seeing a downturn by many securities analysts. What does this mean? Your mother and father probably always said, follow the money. Well, that's what we're going to do here. Let's go ahead and see what the Wall Street boys are looking at. Wall Street was more cautious on real estate tech stocks on Monday, according to MarketWatch, ahead of earnings reports later this week, as some analysts slash price targets to reflect their concerns about housing affordability with interest rates rising. Interesting. Follow me here now. BofA Securities analyst Curtis Nagel chopped his stock price target for Redfin in half. He's sitting at $10 now instead of $20, while also cutting his targets for Open Door shares to $6.50 from $8, and Zillow down to $38 from $47. So these new targets are all below where the stocks are currently trading. So what says the money? We're going to go ahead and talk about that with Mr. Tim Parnell. He joins back the show. Guilty is the verdict. Guilty. A SoCal brother and sister running a real estate scam, taking $6 million, selling homes not for sale. Selling homes not for sale. And we're going to get into it with Mr. Tony Barbarino down there in Southern California. We're going to talk about this. And also we're going to bring back a couple clips from some of our previous weeks on just a little safety caution on all of the different rental scams that are going on right now, especially with the real estate market being as crazy as it is. Okay. Let's see here. One of California's top appraisers, Mr. Mark Buhler, joins Real Estate American News. We are extremely happy to have a fine gentleman of such high education and life experience to go ahead and tell us about all things appraisal, what's going on in the marketplace, what he's been doing since 1987, and how he had the #1 appraisal company in the whole state of California. So stick around, drop some comments, questions, or concerns into the show notes. We'll bring them up here to the stage for Mr. Mark to go ahead and review. 10 markets, ladies and gentlemen, 10 markets that have seen a 50% increase in value in the last 24 months. Last 24 months. You heard me right. So we're going to go ahead and get it down with all the rest of the fellas, and we're going to talk about all of these markets, to include Austin, Texas, seeing a 71% increase in home valuation. Wow. Okay. The perfect storm, is it upon us in the U.S. housing market? We're going to roundtable this, and we also have a clip from Mr. Neil Cavuto from Fox as he was interviewing one of America's top billionaire real estate investors. So we're going to go ahead and review that and roundtable towards the end of the show. So stick around. But before I get forward anymore, I'm going to introduce one of my co-hosts, Mr. Tim Parnell. Mr. Tim Parnell, how are you doing today, sir?
Jake, I'm good, sir. Good to be here.
We've got an action-packed show here today, Tim.
We do, man. It is packed full. I'm looking forward to these topics today. I really am. Especially want to hear Mark do a little bit on that California market.
Yeah. A little advance notice here, ladies and gentlemen. Mark was having some tech issues behind the scenes with internet connectivity, so we're hoping that that's all cleared up. I think it might be, but if something goes awry there, he's going to be a returning guest on the show. So just want to give everybody a heads up. Tim, why in the world should people listen to our show?
Man, well, you know what? Because if they want the truth in the rawest form, right, unadulterated, this is where you go to get it, especially on the topic of real estate and all things real estate and anything that would affect your real estate.
Yeah, we really kind of cut through the noise a little bit. I always like looking at articles, sharing all of these different things with you guys and saying, hey, what's this? What's this thing? What should we really be looking at here? And what type of action should we take in our business and in our life, right? So I think that's important. So that's Real Estate American News, everybody. Mr. Nick Sakis is unavailable today. He had a prior obligation, so we wish Mr. Nick the absolute best. He's going to be coming back to the show. So Tim stepped up to the plate, and he's getting ready to hit a home run with us.
Well, I know Nick is the illustrious. I'm just the shiny. Okay, so that's all I can do.
Outstanding. Ladies and gentlemen, if you're just now learning about Real Estate America News, we ask you to go ahead and head over to reunation.com. We're streaming live on the RU Nation network over at reunation.com. You can enter your information to go ahead and get show notes and hot insider news from all of the work that we do here at Real Estate America's newsroom. Also, if you guys have any hot insider news or would like to go ahead and be on the show or know somebody who would be a good guest, please go ahead and enter that information, and one of our assistants will go ahead and reach out and review your request. So outstanding. Hey, Tim, you know what? We're starting to get some sponsors here for the show, and we're really happy to go ahead and announce Freedom Move USA. If you go to freedommoveusa.com, if you are planning on selling your home and would like to go ahead and save $10,000 to $25,000 on your next move, come on over to freedommoveusa.com, enter your information. One of the call center representatives will go ahead and reach out to you and get you associated to a certified Freedom Move USA real estate professional in your area. They'll come out, evaluate your transaction, and also find out how much you can go ahead and save on your next upcoming move. Anything local and long distance. Tim, that goes a long way to put $10,000 to $25,000 back in your pocket.
What an incredible offer, right? I mean, geez, like moving across country, I mean, that's expensive, right? I mean, and then if you get somebody that can come in and save you that kind of money, that's incredible, especially with inflation today, the kind of money that people are just shelling out at the gas pumps and the grocery stores. Just that's awesome. It really is.
We reviewed on last week that some folks in Bakersfield, California, with their local economic pressures and the latest inflation, an average household would have to go ahead and make about $8,000 to $10,000 additional dollars just to go ahead and sustain their current living situation, right? So we're all dealing with it directly and indirectly, aren't we?
Absolutely. Yeah, it's getting tough out there. That canary in the coal mine, you know what I'm saying?
Yeah.
I feel like that thing is slowly not singing anymore. We'll see where this goes.
Hey, Tim, should we follow the money? Is that a smart suggestion? Should we follow the money?
That's what the wealthy do, you know.
Okay.
They kind of flock to their own, and if you keep an eye on them, you get a pretty good sense of what's going on in the market.
Tim, I've got this report here from Market Watch, right? Let me go ahead and jump over on this screen too. I threw it up here on the screen for everybody to review. Let's see here. Wall Street was more cautious on real estate tech, right? And we're seeing some people starting to downgrade some of their predictions on the industry, on where it's going. So this BOFA Securities analyst, Chris Nagel, went ahead and chopped his stock prices for a lot of the top tech folks that we know. I mean, Redfin to $10 from $20, that's a 50% reduction. And this was on Monday, and I know a lot of the earnings reports for these companies are coming out here this week, probably about Thursday. So we'll see what happens with some of these stocks as they go forward. But Nagel said that web traffic trends across advertising and lead generation, brokerage of iBuyers and these different folks leave all three company stocks in a controversial going on into their earnings reports. They see that the weak web traffic is an indicator that home purchasing demand is slowing, likely due to low affordability, higher mortgages, and obviously with their volume gains from what they had. So that's quite interesting, right? We're seeing that pullback. What are your take on this?
Well, you know what? Again, I'm going to go right back to that canary in the coal mine. If these indicators, right, are kind of like that dissolve of the tip of the spear, so to speak, then what's that roll down look like? How does it affect everybody else under that? And who's not paying attention to it, right? I mean, everybody has a pretty good sense of feeling in their gut of something's wrong, something's not right, but they can't put their finger on it. But then you have data points like this that just say, look over here. This is what's going on. I mean, I even wrote down that Redfin, from what I saw year on end, or at least over the year, was down 70%, Open Door 50%, Zillow 37%. That's an average of 50% down collectively on those three.
Yeah.
If those three are an indicator of just what's potentially going to happen on that stock market on just that sector, what if that happens on the overall stock market? I mean, does that not affect our home buyers and our home owners?
Yeah, big time. You know, the money boys don't like losing money, do they?
No.
Not at all whatsoever. So
no.
when you follow the money, you can see the trends. You see a lot of talking points in the mainstream media news about, oh, we're not in a housing bubble. Oh, maybe we are. Oh, the Fed's going to go ahead and come in and do this kind of a thing. But it's interesting to go ahead and watch the money, and typically it gives you a good indicator on what's going on. Tim, I've got this other report here, same from Market Watch. There's a gentleman, Kiesel, who serves as Global Credit Chief Investment Officer at PIMCO. He warned in an interview with Bloomberg that his long-term 25-year charts that guide his decisions to buy and sell real estate are flashing orange right now. He says, I think we're in the final innings. Interestingly, Kiesel went ahead and called the top of the last housing bubble. He sold his home in 2006. At that time, he actually called the housing market crash, the NASDAQ bubble. He waited till 2012 to buy a home again. And then, according to Bloomberg, he purchased his Orange County home for $2.9 million, and today it's valued at $5.5 million, according to Redfin. But here's what he says. Kiesel suggested that buying a home today wouldn't net more than 2% return. He didn't indicate over what time period, but obviously that's in contradictory to actually the company he works for at PIMCO. PIMCO's analysts have a little bit of a maybe machine washed outlook. I don't know if there's any politics that are at work there or what, but obviously that man Kiesel doesn't want to go ahead and lose any money.
No, he doesn't. And I think that kind of speaks to different mindsets in home purchasing and home ownership. The collective American opinion is, you got to own your home. That's the American dream is home ownership. Yet you've got these affluent, smart moneyed individuals who see the writing on the wall and once before, put their money where their mouth was and went ahead and sold. And sure enough, they collected and probably upgraded their home after that. And then now they're going to sell again, and they're going to wait it out and probably be able to buy some bottom of the market or close to thereafter. And while the rest of America is just trying to hunker down and hold on to what they got. And, this is why I argue that, hey, if you're willing to let go of this mindset of I've got to be a homeowner, well, just how about we just live in a home and you're able to take that equity? Because I guarantee that man is going to take his equity and invest it somewhere, right? I mean, he's not just going to put it on the sideline. You can't just put it in cash and let the inflation devalue your dollar in the bank account. So I guarantee he's got a plan for it. And I wouldn't imagine that he's going to throw it in the stock market, especially these tech stocks, these real estate tech stocks, so, but what is that plan? That's the curious question. But it certainly to me is a good guide for what we could be doing as American homeowners that are sitting on that equity. I know I've said it before, but people are sitting there going, I've got this equity, I've got it. And, I don't want to lose it. Well, maybe if you just waited it out, at least you've got enough room that you're not upside down. But so what if you were upside down and it was still cheaper to pay your mortgage? Stay there, just stay there and wait it out, But
Absolutely.
This is the question people are having to ask themselves. And it's something that really is, it's very unique to the family and the homeowner themselves as what to do.
Ladies and gentlemen, if you're watching us live or catching this on the replay, we ask and would appreciate some support from you. It helps the show grow and it gets out to more people. So if you could go ahead and smash that like button below. If you're watching us on YouTube, hit the subscribe button, and so you know when we go live next time, and share us out to some of your friends and loved ones if you find this information credible. All right. Tim, PIMCO, I started looking into their company. PIMCO's view is shared by many other economists who would argue that stronger lending standards prevent against the type of behavior that contributed to the last crash. All right. But some analysts are bearish on the market. This gentleman, Ian Sherpston, chief economist at Pantheon Macroeconomics, suggested Wednesday that home sales could drop by more than 20% in the coming months and fall even lower. So it's interesting. We've got some polar opposite views on analysts and economists, and I think those oppositions of views are starting to drive the money. So we'll see what comes into the mix here in the middle, right? So
Absolutely.
only time will tell, but I think people should heed on the side of caution. right?
I totally agree. I mean, when it comes to home ownership, home buying, people got to make the decision that's right for themselves. But if they're trying to buy it because they're trying to like keep buy in before the house keeps going up, unless they plan on being there for a few years or more, they might have to, really think hard about what their ultimate goal is.
Very interesting. Thank you, Mr. Tim. Ladies and gentlemen, guilty, says the verdict. We've issued some warnings of caution here on Real Estate America News. If you're planning on renting, if you're planning on moving, buying, selling, all right, find yourself a true licensed professional with high standards that knows what they're doing, so you don't lose your money or put yourself at risk. We're going to go ahead and review something here. A brother and a sister got caught running a scam in Southern California to the tune of $6 million selling homes that were not for sale. So we're going to talk with Mr. Barberino. But about a year ago, this happened.
A brother and a sister have been charged with running a $6 million home selling scam. Adolfo Shawnee of Torrance and Bianca Gonzalez of Walnut allegedly sold buyers dozens of homes without the owner's consent. Prosecutors say they ran real estate and escrow companies in Cerritos, La Palma, and Long Beach that offered homes for sale at below market prices that weren't really for sale.
All right, Mr. Tony. All right. So they obviously were in the title business and things like that prior to. So they had a little bit of prior credibility. They were able to influence their way into homes. Right. Officials say the properties were listed on real estate websites such as below market short sales. And then in some cases, the siblings even held open houses at the not for sale homes by tricking the homeowners into allowing their homes to be used. The DOJ says that the companies would then accept multiple offers on the same homes, telling each of the would-be buyers that their offer was a successful one and taking your money. So there's a lot of impulse out there right now, right? People are, oh my gosh, trying to jump at any deal and opportunity that they can. So much so that I actually was going to bring into the news today. There was a home in Utah that sold for $575,000, and it was a known meth house. It was loaded with meth all over the inside of the home. And even in this hot market, they had multiple offers selling for $575,000. So this fear of missing out that's happening, this urgency that we all have, interest rates are going up and inventory is extremely low. The scammers are taking advantage of it, right? So break this down for us. What happened here?
Wow, this could be a 19-hour subject, and it's something that I really feel for people because it is a little easy to create these scams. I'm not saying I know how, but obviously these people, they came up with a plan, they scammed a lot of people, and in the real estate world, there are some things in place that have been maturing in terms of these experiences, and we move forward and try to not have them happen again. For example, we have a wire fraud advisory document disclosure in California where it essentially says in legal language, don't wire the money unless you're 100% sure who you're sending it to, and even call escrow to confirm before you push the button at the bank. So with these two individuals, by the way, if they get convicted, I believe it's 162 years in jail. So basically, they're not going to come out till the sun dries up. Now, deservedly so. So that said, here's what I would recommend to people, and this is not all the answers. It's just a few starting points. Number one, when you're working with a real estate agent, when you pick somebody or you're going to engage, for every state, there should be a website where you could put their DRE number, Department of Real Estate number, to see their name and information. So since these people obviously can't, like for example, overtake the California Department of Real Estate website, had they had their number entered, they either could have seen a different name or a same name. And even then, you would want to take at least a few minutes to look on the internet to see if these individuals exist anyplace else other than their own website, because anybody can put up a website. People can steal identity. So one of the steps that I've gone further when I'm talking with people is you should probably, if they have an office, actually try meeting an agent at the office. Because let me tell you, if these two actually were, like at a Remax or Keller Williams or Compass, and these buyers said, well, can I meet you at the office first? just so that they can be sure these people are real, because if those alleged agents were like in the office, they go, who are you? We don't know who you are. And the same thing for agents too, for their safety. They can be clients in an office because you have people around you. But to summarize really quick on the idea what these people did, scams like this happen so much, and hopefully over time, more people are getting more aware. That's why they watch news programs like this, so we have these discussions. So when they meet an agent, don't have fear, but have a healthy level of concern, and try to do what you can to see who you're really working with to the best of your ability. Even check with other agents, because we all know each other in our area.
Tony, this report goes on to say that when the houses were never closed upon, officials say that the brother and sister at this firm, they would string the buyers along, sometimes for years, saying that lenders needed to approve the short sales. Okay, so we're getting into a situation. I saw another report where home foreclosures are up over 100%. I don't know the exact figure. I think it was in the 120s to 130s in comparison to maybe 12 months ago, 18 months ago, something like that. Don't quote me on it specifically, but that's pretty darn close. So now that we have, some economic waves that are happening, obviously we're seeing that foreclosures are coming up. Maybe we're getting into the same type of situation, and this is something that people should be aware about.
It's true. Just to kind of take what you just said and what you just said a minute ago, that because especially now with the market, buyers are being a little more apprehensive, because maybe the ones that are qualified are seeing their rates go up, and there maybe some of them or most of them are getting anxious to buy something. So they would be a little more susceptible to trip into a trap like this. So there's only so many things one can do, because a good con artist is they come up with something that people probably didn't think of, or they present a false front like the fake ID like they did, and they can just easily create a company on paper and just have a bank account, and just people start throwing money to get these homes. And the stringing along, it's not unreasonable to hear, if you're buying a home, excuse me, if you're buying a home and there might be certain issues or conditions, and they might know some lingo to throw to the buyer that, oh, well, the bank has to approve the value, or there's an appraiser rebuttal that the value wasn't right. And some of those answers, the answers in and of themselves might be useful and valid in some cases. And if they learn what those phrases are, they can use that on all these buyers. And there are quite a few buyers, probably many around here too, that don't know all the terminology and all the reasons. So if they say, oh, well, there's an appraiser issue, we have to rebuttal it, it'll take 3 months. A buyer would think, oh, okay, that makes sense. So they could string this along. And while they're stringing those people along, they bring more people in, because they're always fishing to accumulate all this money. And I believe the idea was to grab that money in one bulk and get out of the country, for example, where they probably can't get caught. So it's a shame this happens, but that's why we have news programs like this, so we can actually have conversations and hopefully educate people to help make them aware, and do what we can in our own little part to help protect them with somebody they can be comfortable with and listen to.
Ladies and gentlemen, if you're looking to purchase a home or need representation in Southern California, check out Mr. Tony Barbarino. It's Tony Barbarino, BABARINO.com. He's a fine gentleman and can help you out. Before we go ahead and close out this segment, I want to go ahead and bring back a 1-minute news clip, ladies and gentlemen, on the rental scams. We covered this here probably about 3 weeks or so ago, but make sure that it's fresh in your mind. Check this out.
Renters beware. As rent continues to rise in a tight housing market, scammers may be looking to take your money. According to ApartmentList.com, 5.2 million U.S. renters lost money from rental fraud. Lachelle Yates is the Director of Communications for the Better Business Bureau. She says a scammer could have one of two goals. They are either trying to get your money for a property they do not have the ability to rent, or the scammer may be hoping to get your personal information.
We had a renter here in the Triad who reported to BBB Scam Tracker that she had filled out a rental application, including her social security number. And she says that the landlord ended up taking out a line of credit in her name.
Yates says scammers often bait potential renters by posting stolen pictures from real rental listings.
Don't be baited by the sense of urgency, whether it's a sense of urgency on your part because you found the perfect house or apartment, or you need to move in for some reason, or the sense of urgency on their part that they have a whole list of people out there who want this place, so you need to act now.
Quite interesting. Ladies and gentlemen, tell your friends, tell your family. There's negative people out there trying to take advantage of you. So, all right, on to our next segment. I am pleased and honored to go ahead and bring a new co-host here to Real Estate America's newsroom, Mr. Mark Buhler from CMP Appraisals out of California, rated #1 for all home and commercial appraisals in Orange County. Mr. Buhler has been rocking in the real estate game and the appraisal game for quite some time. He is a state licensed certified residential appraiser at CMP, has over 25 years of experience in Southern California. He specializes in private appraisals for legal, IRS, and personal uses such as tax planning, estates, and divorces. CMP Appraisals has both commercial and residential appraisers to serve their clients, and Mr. Buhler is also an educator and helps all other appraisers learn all of the ropes. So, hello, Mr. Mark Buhler. How are you doing today?
I'm doing well, Jay. Thank you for having me on your show.
Yeah, absolutely. Thanks for joining us. So, I love bringing your education and knowledge to the Real Estate America's newsroom. What in the world? You guys must have your hands full these days with the way that the housing market is going on. Kind of give us an overview of who you are, what you've done historically in California, where you're at, and what are the appraisals or appraisers dealing with these days on this rampant increase in price points? Give us a breakdown, if you would.
All right, let me tackle that. Yeah, I started out in 1987 doing appraisals when things were quite a bit different. We used to type them on typewriters back then and look up our data on microfiche machines. So things have come a long way. I've grown and evolved with the business over time. I had a large company at one point. I ran through the mortgage meltdown and the REO world with a large crew doing a lot of REO work for lenders. Moved away from lending after the Dodd-Frank ruling and the when we brought in appraisal management companies into the equation, which is a firewall between the appraiser and the mortgage originator. So since that time, I've kind of been active with my local MLS, Orange County Association of Realtors, and networked with a lot of realtors to generate some what they call non-lending appraisal business that you mentioned about doing estate work and taxation work. It seems to be resilient against rate increases, this type of work. So when we're focused on purchase and refinance transactions and mortgage finance transactions, our businesses are affected, as the rates go. So I've done that for quite a bit of time. I got involved in education probably about 6 years ago around energy efficiency as it relates to appraisal. So I teach some classes on valuation of solar. I've become a subject matter expert on solar as it relates to real estate, and I speak to realtors. I'm actually teaching a class to Hawaii on Monday to realtors on how to market these types of properties and how to deal with the solar issue. Yeah, and how are appraisers dealing with what's happening right now? I mean, for the past couple of years, the market has been pretty irrational and not really based in the data. So when an appraiser gets a contract price that is significantly higher than the asking, unfortunately, their job is to report what they see at the property and to utilize historical data for the most part to determine an opinion of value. And so the problem has been that they're coming up short of the contract price. So one way to combat that is to apply a time adjustment based on the contract date of when a property went into contract. And as we analyze the market and we can see the rate of increase, we can apply that. So for instance, if a property sold 3 months ago and we're in a market that's been appreciating at 1.5% to 2% a month, we could add on 3 months ago times 1.5 or 2. So we might add 4.5% to 6% to that sales price of that comparable. But it has been a challenge. It has definitely been a challenge to keep up with this market. And I often say that it's the irrational exuberance that's leading the Southern California market over, informed buying decisions. It appears in many cases.
So the Fed obviously has recently started to go ahead and get into their, I like to say, fix it airplane and take off. We don't know how their landing is going to be, right? Their objection that they're telling us is to help curb inflation. Obviously, things are going up like crazy, and so are all of the goods for housing material, new construction, everything else, and it's increasing our housing market. So my question to you is, do you think that they're doing enough right now to possibly help hedge the inflation of the home prices? Have you seen anything in your core business that indicates that the adjustments that they've made as of recent have started to go ahead and help us out in a positive way, or is it maybe just not enough?
I think currently we're beginning to feel the brakes come on. We're starting to smell the brake dust. The market is slowing, but the market was going 145 miles per hour.
Yeah.
So if it slows down to 55 and normalizes, I think that would be a good thing, obviously. And the Fed is, they're meeting and they're raising rates, and they're, these 50 basis point jumps that are already calculated into the rates. The rates have jumped up at least two points in the last few months. And so we're seeing borrowers become priced out. If they're going to get a loan, their monthly obligation has increased. The median sales price in my market, the median price in this area is $1 million. So the cost to buy that home went up about $1,000 over the past few months. The Fed is doing what they can, but as usual, they're a little bit behind with removing the QE and increasing rates to battle inflation. We'll see how the landing goes, but for appraisers that are working in the mortgage finance transaction world, amongst my peers that do that, things are slowing up. Mortgage applications are down. We have a severe shortage of inventory here, so purchase transactions are what they are. You put up a home for sale and it sells right away.
Yeah.
So that's
sure
where
does.
we're at here in Southern California.
Well, we were reviewing something over the last couple of news programs that was interesting to us, right? Everybody was thinking about mortgage rate increase, home prices increasing, but all of a sudden now came into the mainstream media. Oh, we've got these things called taxes too. And now all of a sudden home taxes are raising 30% year over year because all of a sudden the home values are up. It's all just a big old domino effect. So hopefully we get to start smelling the brake dust here a little bit more, because I know a lot of folks that are in a situation, whether that's high rental costs or trying to find affordable living for them and their families. And it's an interesting kind of curve of events out there. Mark, hang around with us here. We'll bring you back in for a couple other of the segments and ask your opinion. We appreciate you joining us.
Will do. Thank you, Jake.
Yeah. All right, ladies and gentlemen, we're going to move on here. That's Mr. Mark Buhler, and you're going to get to love him. He's a wealth of information. We're glad that he joined the Real Estate America's newsroom. So if you guys have any appraisal type inquiries or thoughts or anything else like that, drop it into the comments below. We'll make sure we get some of these answered here over the next upcoming news programs. So 10 markets that have seen a 50% increase in the last 24 months. Let's go ahead and bring up some fine gentlemen here and kind of have a conversation about it a little bit. Hello, gentlemen. Chris, Tim, Tony, how are you guys doing today?
Always good.
All right, outstanding. So let me pull up this report here real quick. All right, 12 metros where home values have increased 50% or more since March of 2020. Quite interesting. What you don't see on this report, gentlemen, is that, let's see here, in some of the county's hottest housing markets, the jump in home values have even been more dramatic. Home values in Austin, Texas, for example, have increased 71% since March of 2020, according to Zillow. And as you can see on this chart, we've got Austin sitting there at 71%, Boise, Idaho at 59%, Sarasota, Florida at 59%, Fort Myers, same, the story goes on, Raleigh, North Carolina, Salt Lake City, 50%. In such a short period of time, Is this sustainable, or is it bubblish inside of those marketplaces? Tony, what are your thoughts?
Oh, wow. I can check with my magic 8 ball and see what it says. Probably have the same outcome. That's why, like, shows like these, we have these honest conversations with each other, because there is a lot of sensationalism on bigger news programs. If it's not shocking or a surprise, it doesn't sell. So when I see those numbers relative to where I'm at in Southern California, going from a $2 million house to a 2.1, it's an increase, but it's not a shock. And I see those numbers, 200,000 to 500,000. I half jokingly say to myself, well, all the people out there who have these lower priced homes compared to what I'm used to are saying, wait, I can get how much for my home? And now suddenly, boom, we're getting the jump because of the whole hearsay. So all those $200,000, $300,000 homes, they are getting a jump because of the whole surprise that, wow, the market's getting really hot for sellers and people are throwing more money. 2, rates were really good, which meant more buyers are coming out, and all those buyers compete against each other, and that drives the price up even further. That happens in probably every state, more so on that report. But we also have to understand that even numbers like that, there's hyperlocal and moderate local data. So while those numbers are amazing, 60, 70%, using California as a point of reference, if we don't get numbers like that, it doesn't mean it's not hot here either. So all those numbers are always going to be relative to maybe other states. Now, to summarize the people in those states that are getting,
but Tony, we're talking
money,
50% in 2 years, my man.
it's still an increase, right? It's still, $300,000 to $600,000 is still a lot of money, but it doesn't necessarily mean that house actually the value really is $600,000. It's just that's what it's selling for.
All right. Thank you, Tony. Chris, you were saying in the pre-show something about a no cap. What were you talking about? What's going on there?
Oh yeah, just with these new construction, building partners in the sales office. I just had a call with one where they're it's becoming an industry standard where they're putting an addendum into the contract where they can raise the price and not cap it just because of the market demand throughout the whole transaction. So you might get into a new construction contract with your client, and then it might take a year to build, but they have the ability now to raise that price in accordance with the market $100,000. And so they're doing it to protect themselves, I guess, to be able to gather that money. And I think that's going to also affect, the investment side that we previously talked about, buying homes and new construction.
Mark, what are your thoughts with the new construction appraisal prices and everything in that market? Kind of break that down for us.
I find it interesting that they would not cap the escalators on new construction. I see that in the contracts for existing construction here, because the market's competitive, that the buyers are willing to remove all contingencies and escalate to the point where they just secure the home. To me, as an appraiser, to go out and appraise new construction, to me it seems pointless, only because it's sold just like anything in a store. It's not a market exposed transaction when you're buying it from a builder. So all they're really doing is having me come in and confirm it and put sign my name on the dotted line that I can confirm that this sold for this price. But when it comes to new construction, and I walk into the new construction office and say, well, I like that plan right there. And they say, well, that one's $425,000. I said, well, would you take $410,000? And they say, no, beat it, and then the next person walks in, they say it's $425,000. They said, fine, I'll take it. It's kind of like going into the store and negotiating for a gallon of milk. It just doesn't happen. So I think that appraising new construction, in my opinion, is just buying my signature and my insurance on the value.
Quite interesting. Tim, Austin, Texas is in the news, ramping out the charts at 71%. What's going on in Austin, Texas? Why is that taking the top of the charts? Fill us in.
Well, I'm going back to my coin term migration bubble. I would ask the question, I wonder where the majority of the buyers are coming from for Austin, Texas. I would argue that they're probably migrating from other states, trying to get to Texas, because there's probably security and comforts here that they're not getting at home. And but they're also trying to go someplace familiar, let's say. And Austin, Texas kind of checks that box. So not surprising to me that, people will come from another state where, a 3,000 square foot house might be $1 million home, but they go to Austin, Texas, and it's 350. And they're like, crap, I'll give you 150,000 more than that. I just got all that out of my equity in my last house. And so you've got out of staters bidding each other up and pricing out the locals who are just going, man, like, how am I supposed to even upgrade my home and my lifestyle here? I can't even afford to buy in my local area because they're operating in their own current localized reality. Other people are bringing their reality in as purchasers from where they're from and just saying this stuff is cheap. I'm just going to scoop it up.
Tim, I know that your team over at Patriot Wealth Nation really help a lot of folks, especially if they're not making a move, right? And what they can do with kind of some planning to kind of hedge against some things. How can people get in touch with you, Tim, if they want to go ahead and learn how to be prepared?
Yeah, absolutely. No, they can reach us at Patriot Wealth Nation at protonmail.com. That's the best way. I am the person on the other end of that email. So if you've got questions, I'll be the one answering it. But we're always just happy to set up a Zoom call. We can work with anybody anywhere in the nation. So there's no restrictions on that. And we can just do a consultation, just see what's going on and see what we can do for you.
Outstanding. Thank you, Tim. There's a lot of Florida in that top 12 list, Mr. Chris Manka. Florida is been one of these migration hotspots, right? Everybody's coming to the state. A lot of it had to do with pandemic restrictions from one state to another. Obviously, tax affordability, people wanting to go ahead and start businesses. There was less school restrictions because of different points of opinion. Parents wanted their kids in school and open and going and things like that. There's been a mad rush coming here to this state, and it's no like big question mark why to me in my mind that 3 or 4 of the Florida marketplaces are sitting like this. But to sustain a growth pattern in a lot of these micro markets of 50+%, do you think that that's sustainable? Or from some of these other reports that we've been seeing from some of these market analysts where they're kind of hedging right now, they're saying maybe we're going to have some slow growth. Is it a micro market driver or is it a total nationwide driver? What are your thoughts on these things?
It's definitely micro market. And what you look at somewhere like New York City, I've got a lot of buyers right now that are moving from New York City where, rent average is $3,500 a month, but then you add income tax, sales tax, and, where they can actually, take that monthly income and leverage it into an actual home purchase. And now with the remote ability of working from home, it's a huge upsell for them to be able to, move to somewhere like Florida. And I would say that, when they have these little pocket markets where these huge sustainable growth is happening, you're going to start seeing that pinpoint on that map start moving, because now these little hot spots in Sarasota and stuff are going to hit a cap. And then what's going to happen is you're going to start seeing other places where that growth has gotten to a point where it can't sustain it. And then now in that hyper local market, they're going to leverage just outside of that, maybe within a 10-mile range, because now they can purchase for cheaper. And then those hyper local markets are going to create that, large market increase.
Outstanding. Chris, you're actually working with one of our sponsors here of the show with Freedom Move USA, and you've implemented their programs a couple times. Talk to us about the benefit there and the savings that you're able to pass along to your clients.
Oh man, we could do a whole show on it. Personally, I'm empathetic because I did move from California to Florida. I moved myself because I was stubborn, thinking that I could save money. And then when you look at the nuts and bolts of it, it's an incredibly stressful situation, and it's very, very expensive. With Freedom Move USA, we've done quite a few transactions now, all the way from Washington to Florida to Colorado to New York, New Jersey, and just the savings and the stress relief that you can provide for your clients, I think is a huge added benefit that you can provide to them. And then what that also in turns on a real estate side is you create that trust and a long-term relationship, and they're definitely going to create, an internal referral network where they're going to tell everybody about it.
I think it's fantastic. Helping families save money is going to go a long way in this industry. So
Absolutely.
yeah, thank you, Chris. All right, ladies and gentlemen, we're going to go ahead and come into our last segment of the show. It's a big one. We're going to roundtable this. We've got a segment called The Perfect Storm. The Perfect Storm in the U.S. housing market. We're going to jump in with Mr. Neil Cavuto from Fox. He's interviewing a billionaire real estate investor, and they're kind of talking about what their take is on things to come. So let's go ahead and listen to this clip here, and we're going to get all of the fine gentlemen back in here to roundtable this.
Bloom on all of that, the billionaire real estate developer, Battleborn Investments, acquire of basketball teams, maybe for Las Vegas. I could go on and on. Jay, very good to have you. How do you see housing? I mean, foreclosure activity is still a tiny percentage of the overall housing market right now. You hope it stays that way. But generally, the tougher times get, normally the more those numbers rise. Are you worried about that?
Yeah, we're in the middle of a real estate boom like we haven't seen in the past. And a lot of it has to do with several different factors. You have supply chain interruption, where, you know, a $12 piece of lumber is now $80 to $100. You have low interest rates, and you have a foreclosure moratorium that's pandemic related. So you have a perfect storm of factors that have come together to create this artificial shortage. And now we're starting to see interest rates go up fast. We're seeing the foreclosure moratorium start to lift, and you're seeing the supply chain start to get fixed. And when that happens, that artificial shortage in our housing market inventory goes away, and the result is you're going to have more new home starts, which is going to put downward pressure on pricing.
You know, for now, I always look at this as a pretty good proxy on how the real players in the real estate industry feel when builder confidence is dropping, or at least their commitment to build in the future more homes, or even make the step in that direction with permits and the rest. Does that tell you that they're girding for something?
Well, I think you're seeing builder confidence drop because you have, again, this supply chain interruption. It's hard to get materials. The materials you get are extremely expensive relative to what they historically cost. So your economics change dramatically. And then it's difficult to find labor. You can't find plumbers and electricians and HVAC service people. So building a home has gotten extremely expensive. And as a result, builders are building fewer homes. And what's happening is that's pushing up the value of the existing home inventory, which inventory itself has been, artificially tightened because of the foreclosure moratorium. So you have kind of this perfect storm of elements that have just created this runaway market. But I don't see how it's sustainable.
So what happens? Is it akin to sort of the frothiness we saw in the housing meltdown, ahead of the financial meltdown? In the last real estate bubble, whatever you want to call it, people were buying properties unseen, flipping them, without ever having visited them, and making a lot of money. And it got a little crazy. Are we going to get crazy here?
I think so. I remember in 2007 when builders would have lotteries to buy a house from them, and there were lines, and people would camp out overnight.
Wow.
So, I mean, we potentially could get back to 2007, 2008 situation.
So what about the hot markets like Vegas? I'm sorry, but what about the hot markets like Vegas and what's going on in Florida and everything else? I mean, is that sustainable, or will the momentum slow, or will it be an outright reversal?
I think the momentum is going to slow, and I think there's going to be an outright reversal. Again, housing affordability is an issue. You have rents that are going up because the property values are going up to the point where it's unsustainable. People can't afford housing.
All right, gentlemen. It's not just us talking about these things, right? It's not just us seeing these things in local marketplaces. It's obviously in the talking points here as of very recent. When we say follow the money in the beginning of the show, we're seeing analysts starting to go and downgrade stocks. They're seeing a little bit of a slowing. We're starting to see maybe some dust on the brakes, as Mr. Buhler says, and people are readjusting their purchasing decisions. All of this is there. So is this the perfect storm? Mr. Jay Bloom, multi-millionaire, billionaire, so says yes. He feels that it's going to be a complete reversal. Mark, what is your take on this?
Well, Jay Bloom is a respected investor and also a real estate contrarian. So I think that his viewpoint is what it is, but this boils down to basic economics. Supply and demand are what they are. Demand has not waned. Supply is just not there. So until that changes, even these interest rate hikes and the affordability issue are not going to cause a dent in a lot of this, because what I see in my market, and I'm sure across the country, is cash buyers. There's an abundance of cash out there. So cash buyers are not affected by higher interest rates at all.
Yeah.
But I really do think it boils down to just basic economics of supply and demand.
Mark, how can people get in touch with you if they're interested in your expertise, or if somebody's getting into the appraisal game, or just need you for anything, for your services?
Email is the best way to get a hold of me. It's Mark, M-A-R-K, at CMP, like Charles, Mary, Paul, appraisal.com.
Thank you very much, Mark. We appreciate you. All right, gentlemen. Tony, what's your take?
Well, like I said on a few other shows, it might be oversimplified, but if you love the home and you can afford the payments and that's where you want to live, better to do it now, because the odds of that home being cheaper later, it's a hell of a gamble. There are a lot of benefits to getting that home, and if you have to take a small hit, as long as you love that house and the payments work, that's great. I think also people should, again, I alluded to it earlier, that when even a billionaire is still a human being making the best reasonable guess he can, just like we do too. So I think the public should be aware consistently that anything they see on any news with this data does not affect every single house on a 1-to-1 ratio. For example, in Irvine, the market could go nuts, but the probability of it affecting us minimal to at all, pretty small. So these markets there's going to be micro markets, there's going to be reasonable macro markets. So when we see these numbers, we all have to understand that it doesn't guarantee all these homes are going to go down or up. And anyone, talking about, oh, bubble, burst. You say it often enough, one day you're going to be right. And then they say, see, I called it, but that could be 7 years from now, or it could be 7 days from now. So I would suggest people just, keep in touch with us here so we can talk these things out. And I think at the end of the day, if somebody wants to buy a home and can afford it, they should, but you want to be careful that you don't get scammed. Make sure you know who you're talking to. Ask for references. That's one of the things I put out there so people know I'm legitimate, and they just have to go with the cool head and don't get freaked out by some of this larger news sensationalism. And I think that's going to help a lot of people.
That's Tony Barbarino, ladies and gentlemen. Tony Barbarino, BABARINO.com. Thank you, Mr. Tony. We appreciate you. Chris, you're representing a lot of folks. Your battle board had over 24 people that your team is representing transitioning down to Florida. So what kind of advice are you giving them on the marketplaces, and kind of fill us in a little bit about your neck of the woods?
We're talking about the hyper local inflation and stuff, and I kind of alluded to it earlier, is linking up with a real estate agent that knows those hyper local markets and then sees the sustainable growth in maybe other regions. So from a seller's perspective, somebody that may have just made $400,000 in their home, they want to leverage that and are willing to move maybe 10 miles away, but now they can get that home for a substantial amount cheaper, but that it's going to be growing the next 2 years. Now they can double up on that equity growth. There's so many different strategies, but like, Tony and everybody else has said, you just got to use caution and use your best judgment and then leverage that network,
Sounds good. Yeah, Florida's housing market is in the news all of the time because of everything that's going on. It's a pretty hot market. Chris, how can people get in touch with you if they need representation in the state of Florida they're moving to and from, or for their family members?
ChrisManca.com or cmanca@chrismanca.com is my email, and I will help you guys out.
And now you can help people save possibly $10,000 to $25,000 on moving to Florida.
Absolutely.
Good deal. Thank you, Mr. Chris. We appreciate you. Tim, we started this show with follow the money, and we come out the backside of the show with still kind of following the money here a little bit. What kind of cautionary words would you let our listeners know about as they start to get into the spring buying market?
Well, like I said, I think there's a couple reasons, and when I have somebody ask me questions about, is it now a good time to buy, my answer is actually just more questions, and it's, what does your financial situation look like? How long do you plan on staying in the home? Where's that home going to be? And do you plan on having a family or growing a family, or is your family going to get smaller? These are things that now more than ever really should be considered, where before you could just go out, go shop, and kind of, if you didn't like it after a few years, you could sell it and go upgrade or downsize, whatever. Now you really ought to be pretty darn selective moving forward, because you don't want to be in a scenario where you buy now, you could be upside down a little bit for a few years, however long that takes, but you're locking in your mortgage rate, right? So having a fixed lifestyle mortgage, right, versus a rental that could fluctuate with the market, I mean, that in and of itself could be a blessing for people. So it really, at this point, you have to have some discernment on what your decision is. And I would just argue that really drill down on what you need, what you want, and make sure that you're willing to commit long term.
Yeah. Long-term play is quite different, right? It might hurt right now, but if that's the one that you love, it is what it is. But if it's more short-term transitionary, it's funny. The neighborhood that I live in, I spoke with some of the homeowners at the most recent HOA meetings, and some of the folks that have lived here. This neighborhood was built in 2007, 2008 timeframe, and the price points at that point, right before the housing crash, were pretty inflated. So did you know that some of these folks have been sitting inside of their homes and just now are starting to go ahead and recover from that moment in time? It's taken that long to recover, and prices were that high.
That is incredible. That is incredible. I would say that is a very cautionary tale right there.
So one of the gentlemen said, I felt like I was jailed inside of my home. I couldn't make any transitions. I had to stay here and ride it out for the recovery regardless, because I was always upside down. And then they were paying that higher mortgage amount for all of those years ever since then. So
yeah, I forgot Florida got hit pretty darn bad on that last mortgage collapse there.
Yeah, without a doubt. Thank you for joining us today, Mr. Tim. We appreciate you.
Good to be here.
Yep. All right, ladies and gentlemen, closing out the show here. Follow the money, watch for scammers. Make sure that if you're in the business of needing to buy or sell a home, that you find some good representation. These fine gentlemen on the show can help you in their respective markets, but I'm sure they could go ahead and help you find other people in your neck of the woods too that are reputable if you don't know how to get in touch with somebody there. All right. Once again, a word from our sponsor, Freedom Move USA. If you are planning on buying or selling a home, moving from one place to another, please make sure you go ahead and come check out freedommoveusa.com. Those folks over there can get you aligned with a certified licensed real estate professional in your area that can also help you save $10,000 to $25,000 on your next move. All right. So check out freedommoveusa.com. And also, ladies and gentlemen, we are always streaming live on the REU Nation Network. It's a super cool place to hang out. Tell all of your friends about it. Come on over to reunation.com. Check us out at Real Estate America's Newsroom. Enter your information to get show notes and hot insider news. We work really hard to go ahead and give all of this stuff to you guys after the show so you can dig into the guts of the news story that we have. And also, as always, would you like to be on the show? Or do you have any hot insider news? Please enter your information on Real Estate America's Newsroom page at reunation.com. And one of our associates will reach out to you to get in touch. All right, ladies and gentlemen, have a blessed rest of your day. It is the beginning of May. Make it a powerful one. And please join us every Tuesday and Thursday at high noon Eastern, where we're streaming live. And tell all your friends and family about us. Make sure you hit the like button, grab the subscribe bell, and send some comments around. It really helps us out, and we couldn't do this without you. So until next time, ladies and gentlemen, have a blessed rest of your day, and thank you for joining us today at Real Estate America's Newsroom.